Good to have you back here on Smart Means Business. It's the hour of 8 o'clock and we're kicking it off with our business tip of the day. And the tip says any discount is a special deal. If you're giving a customer or client a discount, let them know it. When you send the bill, be certain to indicate the regular price and the voluntary discount you're giving them, because this reminds them that they are getting a special deal. You see, sometimes in business, we are giving back to our customers. We've seen companies that give back to their clients and they make it they make it seem so clear. At times, these companies tend to even advertise it, whether on social media or on TV, that they are giving an offer so that their customers feel like it's worth a discount. Every time you do this, you are easily making this customer feel appreciated for supporting you. You know what they say, that a customer is your boss as a business owner. So it's just like you're appreciating your boss, or you're doing something that your boss will be happy about. So a discount is a special deal. So it doesn't make sense for you to make a discount, a voluntary discount, and you don't let the people know about this kind of discount. So it's better you tell your customers or your clients that, well, I have a special offer for you, and this is it. Maybe you would say, this drink was at 2,500 for this month. Since it's the Ramadan period or Ramadan season, it will be at 2,000 Ugandan shillings, a deduction of 500. Well, besides that, let's get our business quote of the day. Now, Socrates, who is the father of Western philosophy, says that the secret of change is to focus all your energy not on fighting the old, but on building the new. The secret of change is focus all your energy not on fighting the old, but building the new. At times we always live in the past, and it never changes who we are in the future. So we have to build on new. If it's new business ideas, let's strengthen the business ideas. Let's not build, because every year trends change in the world of business. So that means you have to adopt to the changes. Don't drive business thinking that you're supposed to have the same kind of mentality and the same kind of element at the end of it all. Well, now, besides that, as we kickstart off this hour, the Uganda Revenue Authority is having a target for the next financial year of 2023-2024. This target is 29.33 trillion Ugandan shillings. That is the target of the money they want me and you, a taxpayer, to remit. So in the tax mobilization kind of situation, URA is driving towards achieving its target of 29.33 trillion. Now there is a projection of more registered people to pay taxes according to this. There is a projection of more registered people-to-people taxes, and the Finance Committee last week assured support to the Uganda Revenue Authority budget as well. Where is the money going to come from? Because you see, these are budgets. When you look at the Uganda Revenue Authority at the start of every financial year, they always have a set target, and in the first quarter they release pretty much performance of the previous, of the first collections, and of course what the Ugandans have been contributing and remitting and everything. But by the look of things, one of the reasons as to why this target can be met, before we actually even go into reasons as to why it may be challenged, which we are not looking at in any way. One of the reasons as to why this can be achieved is if all businesses that are registered are paying taxes fully and in time. Then also, the businesses that are not registered, because now URA is on the move of making sure that every business is registered. So if all this comes to pass, the reality is 29.33 trillion may even exceed. This is the target. So by the end of the financial year, URA hitting maybe a 30 trillion mark will actually be a win-win for Uganda and of course the economy as well, and the Ministry of Finance too. So they are laying strategies to ensure that this comes to pass. The Finance Committee of Parliament assured them support on the URA budget for the next financial year to the taxpayers out there. I didn't mention at the start of the show that it does seem like we Ugandans tend to put our economy to a rest, especially during public holidays. There are certain sectors within the economy that seem to be dormant, especially when it's a public holiday. And then during that time, money gets held somewhere in the event. So that undermines the business flow or undermines cash flow, because during that time it is more of the spending, and that spending during public holidays at times only goes to one sector, that is the entertainment sector, maybe even those within transportation and everything, but mainly the entertainment sector tends to take a lot of money during that time. And remember, it's the same entertainment sector that again is more operational during the nightlife economy of our country. So by the look of things, how this is realistic and how we can wake up our economy even during public holidays so that it doesn't seem to be dormant, especially amongst the formal sector, because the informal sector operates any day, anytime, regardless. Whether it is Christmas, whether you will still find someone selling a commodity or something. So that's how much the informal sector still plays a pivotal role in keeping our economy afloat in such a time. But well, now let's head to Parliament though. In this update we have John Musinguzi, who is the Uganda Revenue Authority Commissioner, giving us more of what the Uganda Revenue Authority intends to do. He was appearing before the Finance Committee in Parliament on Friday, last week, before the holidays of Easter kicked off.
We've been here at Parliament for the Ministerial Policy Statement for the next financial year in the URA budget. We've had a very interactive and informative discussion with the honourable members of the Finance Committee. We've carried them through the achievements of the current financial year so far, and we've discussed about the projections for the next financial year and what we intend to spend our budget on. It has been a very good meeting, and they have given us the assurance and support. Country, our target for the new financial year is going to be 29.33 trillion. This is a significant jump from what we're supposed to collect this financial year, 25.55 trillion. But with the support of Parliament and government, we are hopeful, and of course the support of our taxpayers, we are very hopeful and optimistic that we'll be able to collect that high target. Mr. Commissioner, is the number of taxpayers on our register. This has been a significant improvement from about 1.7 million where we were about 2 years ago. So the tax register is growing, pointing to the fact that more Ugandans are beginning to contribute to this effort of paying tax. It's a good improvement, and the members of Parliament have appreciated that progress. As observed, and the Parliament Committee really supported the principle of improving the pay of tax collectors, because they have a very demanding and sensitive assignment, and yet even the skill set to do that takes time to build. But of late, we are beginning to lose a number of resourceful staff because our pay does not match the market pay. So the committee appreciated that, and they pledged their support. But again, that must be done within the available resource envelope. So they took note of that, and we hope that in the coming years, this will be given more attention. And what they could do within this financial year, they've also promised that they will do that. Any support they can give in the new financial year, they will do that. So I've been saying that we have a number of challenges that stand in our way from collecting the revenue that we are supposed to collect. Some are internal to us as Uganda Revenue Authority, and we have been improving our efficiencies in analyzing data, in managing risk, in identifying where the revenue leakages are. Some are external, like the issue I was explaining of invoice trading, where a taxpayer presents a false invoice that does not exist and therefore reduces their VAT liability. So with the improvement of technology and deploying more tools to help us analyze data, we are discovering these and we are sealing those revenue gaps. That is why the last 2 financial years, in spite of government not coming up with new tax rates, our revenue collection has been growing by about 15–14%. It's because we are closing the revenue leakage gaps. We are even moving a step further to deal with our own internal discipline as an organization. So any staff who compromises on the standards of integrity, we deal with them harshly, including prosecution of late. You don't only lose a job, but you also go through the courts of law for an appropriate punishment for having caused revenue loss. So these measures are helping us to improve our revenue collection, but of course the fundamental investment that we are making is in technology, because technology is able to show a lot more, and we follow that leading that we get from the analysis of data, and then we close the gaps. And we hope to continue doing that to be able to achieve the targets that we've been given.
And well, besides that, the Uganda Revenue Authority, according to the latest figures, as of February 2023, the target for July to December 2022 was 11,764.83. It was 11,764.83 billion Ugandan shillings, and the net revenue collected was 11,670.03 billion Ugandan shillings in there. So also besides that, as of 10th February, Uganda Revenue Authority exceeded its January target by 14 billion. They exceeded it, according to what the URA revealed. They exceeded the January transfer target by collecting 2,093.2 billion Ugandan shillings over a target of 2,078.52 billion. So that was they exceeded it by the end of it all. And according to details, Ugandans do seem to be compliant, even though we still have those who aren't as much compliant as such. The Revenue Authority continues to remind Ugandans to pay taxes and remit to the taxman for the growth of the economy and the growth of the entire country. Well, I didn't mention Andrew will be joining us, and it's time he's here on the Easter Monday together with us again. Good morning, Andrew. How you doing?
Good. How are you?
I'm okay.
How was your Easter?
The Easter was fair. Fair.
Okay. I mean, it's been quite same to me. It's been quite just fine. Okay. You know, heading to our topic of discussion in here. First of all, there is a fact which I want us to acknowledge is that there are lots of money that flow into this country. Lots of money, transactions happening. Because I'm trying to connect you to the aspect of the Finance Ministry assuring support to the Uganda Revenue Authority. Well, I know as a revenue collecting body, I feel like they need whatever is necessary because of those different challenges that they have been going through in terms of trying to collect taxes. I was so amazed when the Commissioner General was speaking on that report when he said embracing technology, and one of the ways to make sure that they can really be able to get those taxes very efficiently. But investment in technology is quite expensive. That is something which You cannot stand on your own as an agency. Probably you need all that. But however, I wouldn't still want to say that the Uganda Revenue Authority should always be relying on the finances that coming in from the ministry. I want to assume an aspect of the widening of the tax bases, like what has been going on. Last year, I think, I don't know how far they have gone about taxation of music, concerts, because I was seeing them as one of the potential sources of revenue. I believe when the tax revenue base is widened, I feel URA is one of those organizations that can actually be in position to stand, in itself. However much it's a government agency, the possibilities, the taxes that, once you widen that whole aspect, you have no idea what income portal you're putting yourself into. Well, I would also think there is also this aspect of the informal. Let me talk about the informal sector. The informal sector, millions and millions of money, actually billions of shillings of money, if I'm not mistaken, on a daily basis, on a good busy day, transfer through. So all this time, regardless of the reports they put out that they got these shortages and all this, I feel like they're not in a place of being so critical in trying to say that, I think money is in here despite these shortfalls, but probably there is money that is somewhere, but we just don't know how to tap into that money. And that is the informal sector, like I told you, because I feel, just the fact that our country, our economy is predominantly informal, it so happens that even the transactions which happen in there, the fact that they are not accounted for anywhere, they will always reflect not enough taxes collected, trying to presume quite so many aspects. Well, so I believe if the Uganda Revenue Authority really channeled efforts to employ technology and to find ways to tap into the informal sector, but of course living friendly taxes, not taxes that are going to put people out of the business, that could be one of the channels. And also, I feel like implementation of the proposals, whatever they put in place, they shouldn't stay in talks for a very long time. If you say you're taking a deliberate move to do this, do it. Because once you take long, remember every other day people are thinking of ways to evade taxes. In as much as you're trying to see ways of widening the tax base, people are looking for ways of evading taxes. So if you delay to implement a decision, for example, I know it has to go through review, the board sits down and all this aspect, but there should be at least some sort of competence when it comes to implementation, whereby, because like I say, this is one of the bodies that I feel have the ability to get these revenues and even stand, because still the money which the government uses to finance the economy comes from these guys.
Very true. And by the look of things, they continue to get this money. And for those who actually wonder how, it is because we pay the taxes. Because also by the look of things, the domestic collections, or those collections that are within the country, that is from the local traders, formal, from the businesses operating within Uganda. Those are businesses, regardless of the kind of nature of business, as long as it's registered and it's paying taxes. The latest figures also show that the collections hit the target. They continue hitting the target as for, and of course posted a surplus. I would tell you, normally when Uganda Revenue Authority sets these targets, at times we even hit and post a surplus. And the surplus always is worth looking at. Now, for example, like I did mention here, when you go into the URA portal, URA exceeded its January target by posting a surplus of 14 billion Ugandan shillings. So that means that was 14 billion more of what was estimated to be collected. And
it's very
this puts us into questions where, okay, the targets are in there, then what happens after?
Exactly, that's the question I want to talk about. Okay, yeah, we are hitting surpluses, but of what impact is that surplus? Or it just remains that we hit a surplus and it stays there. But I want to look at a perspective whereby, okay, we talk about a surplus which is very can I say, a surplus which is, you can feel its impact when it comes to development projects. You know, the country knowing that we're not going to borrow money any longer, but the fact that the public debt always keeps on rising every other day, and you hear surpluses, it doesn't seem to connect. But why? But anyway, putting that aside, I know whatever happens in there, if we could have, because remember, even that money, there are costs you incur when you're collecting these taxes, you have to pay these workers, you have to, you know, do all that. But getting back to the actual point is, if they say that we are going this direction, for example, last time they talked about taxing musicians, digital companies, take the step forward. I mean, do it, you know. But also, remember, like I said, the more you delay to implement something, the more people think of evading taxes. However much you might feel like you have a surplus, but it's like saying that, okay, you're expecting less money, but even the surplus you've hit, you've gotten more money, is not enough to meet your demands. So I feel like they should target, they should really think deep, regardless of what surplus we exceeded our what. I feel like if it's not causing impact, if we don't see the impact, I think we are not yet there.
Okay.
When it comes to thinking of terms of widening the tax base, you know, whereby we get these revenues and, you know, we feel like, okay, it's something. And also I feel like the excessive, the tax holidays given to these other investors, the tax incentives, well, I know sometimes that's not in their power, but I believe if they could sit down, you know, the UIA, they negotiate all these other aspects. You know, this is about coming to an understanding of the different stakeholders, you know, the different ministries. You negotiate all these aspects. I collect taxes. I come to you, the Minister of Investment. I tell you, you know, this is the challenge I'm having. Why don't you make it A, B, C, and D? You cannot tell me that these investors, when they go to those other countries, they don't pay taxes. They pay the taxes. You know, though, however much, there is this other factor that, you know, yeah, I know they spend too much, you know, purchasing land, but even most of them, like some of them are given free land for investment, you know. I would feel like if the Uganda Revenue Authority could sit down with the Uganda Investment Authority, trying to see all these other ways to harmonize, you know, how best they can at least get some revenues from these investors in a way that is negotiable. Of course, not in a way, I know those incentives they can't be removed, but that's just one of the aspects. You sit down and try to make terms a little bit fair, because at the end of the day, the country, the reason as why we bring these people into the country is not to make it feel good that we have investors. There has to be an impact, you know, of the revenues that are coming in. So all other channels, but the bigger factor in here, they should implement as fast as any policy they propose, and also try to venture into the informal sector, because there are lots of money. I look at a surplus which is having an impact to this country's economy at the end of the day.
Okay, and of course, for those who actually are wondering about the kind of situation, is that the Uganda Revenue Authority has set a target for the next financial year, 2023-2024, to 29.33 trillion Ugandan shillings. Will they meet the target? Will they post a surplus? We wait and see. The money will definitely be coming from taxpayers, both those who are dealing in the local businesses and those who are leading into or dealing in the international relations. It's business this morning here on Smart Means Business. After the break, we shall be coming back to the realistic point of view in regards to sports business and entertainment. But as we're heading there, remember to kickstart your investment with Zabu. Zabu is a platform by Alltech East Africa which gives you an advantage over the rest to kickstart off your investment journey with the platform. Zabu, my money, my future. Remember, if you have no account yet with the platform, all you need to do to register is use your USSD code *292#. Register with your NIN, and in the next 24 hours, then you will be able to invest. Markets open at 8:15 a.m. and close at 3:15 p.m. Though, as of today is a public holiday, it won't be operational since they are closed during the weekends and on public holidays. As a matter of fact, Zabu says, my money, my future, Alltech East Africa, do something new. You're still watching Smart Means Business. After the break, we'll return shortly.
Smart 24, driving business.
My name is Kaheru Bright Bernard, a sales and marketing consultant with Bukona Agro Processors. Bukona Agro Processors is a local manufacturer of green energy, specifically ethanol, for clean cooking. The factory was established in 2013. Factory work started by 2019, and by 2020 we got support from government through Uganda Development Corporation to further improve our production, manufacture stoves that would be used, that would use ethanol for clean cooking. So with that fuel, we're producing fuel, green fuel, with the bio stoves for clean cooking. And we are in a partnership with Gulu Diocese that has about 9,000 local farmers producing cassava, which is a raw material for production of ethanol. And we also use maize and grain, specifically sorghum, for production of the fuel. And currently we are exporting to Kenya. We have a partnership with Vivo Energy that supplies Coconut Works, a distributor of clean cooking solutions within Nairobi, Kisumu, Nakuru, and other parts of Kenya. We're also distributing within the local market in Uganda, but with, of course, the production of biostoves, we hope we shall also improve our distribution network within Uganda to develop the culture of clean cooking using ethanol made from cassava that is locally produced here. And we hope that is going to support sustainable development goals, specifically SDG 13, 7, and 3, since our effort is to reduce the use of charcoal that has seen a lot of forests cut down, that has seen a lot of Mother Nature being lost, and most importantly, carbon emissions that are being emitted into the sky, causing a lot of green energy issues here and there. So we hope with as we scale up further with support from government, specifically Uganda Development Corporation, we shall be in position to achieve these objectives, develop that culture of clean cooking, and have people consume more of that food. And within our community, we have really had a lot of impact, created a lot of jobs for the local farmers, about 9,000 farmers under the Archdiocese of Gulu Catholic Church. And of course, the local people within Nyoya, within Gulu, and the surrounding areas have gotten employment. We're employing close to 200 people on a daily basis as temporary and permanent staff. And that has really had a lot of impact. And we are hopeful that as we scale up this production process within the local industry, energy, specifically the energy sector, we shall change lives and we shall improve how we consume, how we cook, how we ensure we are consuming our environment through effective, clean, and healthy cooking solutions.
Smart 24, driving business.
All right, we'll be back, and many thanks for being part of Smart Means Business. How you doing? Good morning. You're watching a show that is dedicated to kickstarting your morning as the week is ahead of us. It's a dull business day in Kampala. I don't know how it is in your areas though, but like I did mention, Ugandans tend to put a hold on two of the business activations, especially when it's festivities or such days of the public holiday. But now, besides that, Zabo is here for you. Zabo is a platform that makes it very, very possible to kickstart off your investment as it's supposed to be. And obviously, as you kickstart off your investment, remember the Zabo platform, the chances are quite high that you can grow your investments with them. Registration is star 292 hash. Registration is with your national identification number. Quickly kickstart off your investment, and as you kickstart off your investment, the Zabo platform says, well, it is as simple as it gets. Kickstart off your investment with them, but it's only on weekends and public holidays that you won't be able to invest and grow your investments with the Zabo platform. The other days you're able to grow and invest heavily. It's time for us to go into sports business though. Okay, now with sports business today, we are taking a look at the world's richest sports team owners of 2022. Now, former Chelsea owner Abramovich dropped off as a Balmer rises. Now, there was a list that was released by Forbes magazine on the world's 10 richest sports owners, having a combined net worth of $353 billion, holding steady from a year ago despite rampant inflation. Now, so by the look of things here is that it has been a tumultuous start for 2020. It was a tumultuous start for 2023 last year, by the look of things here. And for the business owners, there are lots of people who are actually making the money, if you are to look at that. And on your screen, you definitely get to see the list for the top, the richest sports team owners for the year 2023. Now, at number one is Mukesh Ambani. Now, Mukesh Ambani is from India, and he owns Team Mumbai Indians. That is for, you know, India with cricket, big on cricket there. And his source of wealth is diversified, and he has a net worth of $83.4 billion. Through Indian conglomerate Reliance Industries of $104 billion annual revenue, Ambani owns the Indian Premier League's Mumbai Indians, with Forbes named India's most valuable cricket franchise, worth $1.3 billion. Last year, Reliance recently purchased a franchise in the inaugural Women's Premier League and owns cricket teams in South Africa and UAE. Then at number two is Steve Ballmer of the United States. He owns Los Angeles Clippers. Source of wealth is Microsoft, and of course his net worth is $80.7 billion. He's the former CEO of Microsoft and has seen his bet on the Clippers pay off since purchasing the team for $2 billion in 2014. His next move is investing in another $2.2 billion for a new arena for the team in Inglewood, California. Now at number three is Rob Walton from the United States as well. His team is the Denver Broncos. Source of wealth is Walmart, and his net worth is $57.6 billion. In June, the Walmart heir blew away all other bids to purchase the Broncos for a sports franchise record of $4.65 billion. His first season didn't go as planned though, with the team finishing 5 to 12. Of course, as we continue to look at the other list of the top 10 world's richest sports owners of 2023, from Mukesh Ambani, Steve Ballmer, we have Rob Walton, and obviously moving further to looking at Two of those, for now, are coming in from the United States so far. But the big man in there is Mukesh Ambani. Mukesh Ambani is from India. You see, regardless of the fact, football is the most represented sport among the top 20, if you're to look at the top 20 richest owners, with 8 of them owning stakes in 10 teams, which includes 5 from Major League Soccer, which have become a popular investment in there. Now, at number 4 of the world's top richest sports owners, we have Francois Pinault and family. The citizenship is from France. He owns Stade Rennais FC, and his source of wealth is luxury goods. His net worth is pretty much $40.1 billion. 1 year before, he purchased a controlling stake in the Gucci Group in 1999. The founder of the luxury giant Kering bought French Ligue 1 football club Stade Rennais. The team has never finished higher than third in the league of French Ligue 1. Now, at number 5 is Marc Mateschitz from Austria. He owns New York Red Bulls, Red Bull Racing, RB Leipzig, and of course Red Bull Salzburg, still in Austria. And his source of wealth is the Red Bull energy drink. His net worth is $34.7 billion. He decided to invest in, of course, sports as well. And then when Red Bull founder Dietrich Mateschitz died in October, his 30-year-old son Mark inherited 49% of the company, plus stakes in the New York Red Bulls, RB Leipzig, and 2 Formula One racing teams, that is Red Bull Racing and Scuderia Alpha Tauri. At number 6, though, is James Ratcliffe. Now, James Ratcliffe is from the United Kingdom, and he owns OGC Nice. And source of wealth is chemicals. Net worth of $22.9 billion. He's, if you've heard of Sir Jim Ratcliffe, so he's the founder and chairman of Ineos, built his chemicals company into a conglomerate spanning multiple industries. Now, the Ratcliffe-controlled firm bought League One's OGC Nice in 2019. Now, if Ratcliffe's reported pursuit of Manchester United is successful, though, UEFA rules may force it to divest from the French football club. And then he will actually change. It will actually change to only owning Manchester United. Now, Sir Jim Ratcliffe, or if you to look at that, James Ratcliffe, is one who is vying or bidding to buy Manchester United from the Glazers. But he's facing some huge competition from the Qatari. Now, following, as we move further to looking at the world's richest sports owners, though, we now head to number 7. Masayoshi Son from Japan. His team is the Fukuoka SoftBank Hawks. His source of revenue is the Internet and Telecom. Net worth is $22.4 billion. He built SoftBank Group into a mobile telecom and investment giant. At the same time, he oversaw the Fukuoka SoftBank Hawks through a run of success that included 7 championships and a 4-peat from 2017 to 2020. Son also had a stake in Major League Soccer's Inter Miami CF before divesting in 2021. Now, at number 8 is David Taper from the United States. He owns the Carolina Panthers and Charlotte FC. His source of wealth is hedge funds. Net worth is $18.5 billion. He was once the head of the junk bond desk at Goldman Sachs. He founded Apollosa Management in 1993 and built it into a $20 billion in assets under management. As it speak, in 2018 he bought the Panthers for $2.3 billion, and he has since replaced its general manager and 2 head coaches. At number 9 is Daniel Gilbert from the United States. He owns the Cleveland Cavaliers. His source of wealth is Quicken Loans. Net worth is $18 billion. The Quicken Loans and StockX co-founder has seen his net worth drop from $51.9 billion in 2021 as the mortgage industry has cooled, but his investment in the Cavaliers has continued to skyrocket. He paid $375 million in 2005 for the franchise, which is now worth $2.05 billion if you are to look at the issues here as well. So Steve Cohen at number 10 from the United States. net worth of $17.5 billion. Before becoming a freewheeling big sports owner, Cohen as a successful controversial asset management, his 27 billion assets hedge fund by the look managing outside capital in 2018 reportedly generated more than $2.4 billion in profits for investors last year amid a rocket market, according to data from LCH Investments. So, if we are to look at the top 20, football or soccer, as it's called in the US, would be joining the queue. At 11, you have the likes of Robert Pera from the United States. You have Jerry Jones from the United States as well. We have Stanley Korionke in United States as well. Shahid Khan, United States. Stephen Rose, United States. So out of the top 20, it's still the billionaires from the United States. Summing up this list from Forbes, courtesy of the top 10. And the list was released last week, showing the top 20 richest sports owners of 2023, with the Indian Mukesh Ambani, Asia's richest man, still leading this list here. Okay, now that aside, that is it for sports business.